G'day guys, Nathan here from Galloway. Today we're going to go through the most frequently asked questions we're getting at the moment as mortgage brokers in Australia. Starting off at the top, Jaden, why has your borrowing power gone down recently?
Yes, I've had a couple of people inquire. They had a pre-approval 12 months ago and said, well, the bank pre-approved me for $557,000 a year ago. Why are you telling me now it's only 510, 520? Why has it gone down so much? And there's a couple of reasons for this. The first is the interest rates and the bank's assessment rate. 12 months ago, interest rates were quite a bit lower. Today, they're looking at the current interest rates, which say around 6%, and they're still adding a 3% buffer. This is massive. It can make the difference between, having a bigger borrowing capacity or not. And in some cases, if your income's lower and a couple other variables there, it could have cut 20 to 30% from your capacity. So the first thing, interest rates making a big difference. The second thing, I had a conversation a little bit earlier with a would-be investor. He bought his home in December, equity's gone up, looking really good, and said, Jaden, I'm ready to buy. Let's do my borrowing capacity and look at what it is. We went through and did the figures. I put the figures in the calculator. He said, my living expenses are about $2,000 a month. That's what I call it. I spend for fuel, electricity, everything else. I said, mate, sorry to say, but the bank's minimum benchmark for your monthly living expenses is $3,200. So the bank actually says, all right, well, Nathan's spending $2,000 a month. We don't really care. Based on your income, we think it's $3,200 a month. And that comes off your borrowing capacity. So with inflation, everything happening, the bank has not only increased interest rates, they've increased the living expenses, and that net outcome is reducing your pre-approval and your lending capacity. So what are some things you can do to actually fight this? What can you do to get that out?
I think this is another big thing for those would-be purchasers that might be in a de facto relationship but don't want to purchase with their partner. We see this commonly where if you're in a de facto relationship, the banks will automatically include your living expenses to be you and your de facto partner, so they'll default at maybe $3,500 instead if you're a single person where it will be defaulted at $2,000. Now that makes a big difference because you might go, well, my partner's completely independent. They're working. They're not reliant on me, but the bank doesn't see it as that. They put them as a dependent on your position. The good thing is some of the lenders can look outside of this and go, well, we can see your partner's working. We'll actually take the lower of your living expenses, which increase borrowing power. But to your point earlier, ways you can increase your borrowing power, it is tough. I mean, other than getting more income, so increasing and looking at opportunities to work more or get a pay rise, there's things you can do such as closing your HECS debt. If you do have a small HECS debt left, doing that can increase your borrowing power considerably. If you've got credit cards, for every $10,000 in credit card you have, your borrowing power reduces by $70,000. So closing credit card also helps.
A couple of things we see if you've got a novated lease, that can be a killer. I had a client the other day, had a lease, it was about $1,000 a month. It was reducing capacity by hundreds of thousands of dollars. So that can be one that's big. And the second one is tax deductions on your pay slips. So it might be common, you might be paying extra on your super, trying to build a buffer there. You might even get meal allowances. It can be pretty common in the hospitals where you can get rent as a salary sacrificed item on your pay slip. And the banks don't really factor this. Sometimes they won't add that back. So having a mortgage broker that can help and look at these things can make the difference between getting a home that sort of ticks your boxes or waiting longer.
Now, Jaden, the next question we're commonly getting asked at the moment is clients coming across a property that they absolutely love, but they actually don't know what to say to the agent. Jaden, what are some questions you should be asking agents when you are finding properties that you're interested in?
It's so frustrating at the moment. You might see a home that you absolutely love. It's on the market and it might not be marked as under offer. It can be pretty common in the States where you can make a subject to finance clause. We see this happen a lot in Brisbane, in Melbourne as well. So the first question you probably want to ask the agent is the property still on the market? Is it under offer? Is it still for sale? Because I've had cases and I've had clients that have gone to open homes, got really excited, got their mum and dad along. Mum and dad love this property. I'm going to make an offer. Got to talking to the agent at the end of the open home once they've measured out their bedrooms, looked in the cupboards, got excited, ready to make their offer, and then found out that, it's under contract. And we find out if it's unconditional on Wednesday. They don't often update the listing. So the first question to ask, is this property still on the market? Is it still for sale? Is it under offer? It sounds ridiculous that you have to ask that, but unfortunately that's the reality of the world that we live in at the moment. The second one you want to ask is, what are they looking for? Is there a bit of a price guide? What are the seller's expectations for price? Do you have any comparable sales that you might give me that give an indication of what they're looking for? Because this is another thing too. You go online, you put your price range in your filter. The agent might say, well, this property's for sale or offers over. And what does that even mean? Hopefully the agent will give you a bit of an indication. That depends on the agent. They might just say, well, we're looking to the market for guidance. We want to see what you think, put your best and final, that sort of thing. And in which case, well, it's up to you to do your research. But, you can also might get an indication. The agent might say, well, we've had another offer at 550. They need something north of that to help.
And I'd also be careful of other things you ask that might be misleading by the agent. For example, you might say, why are they looking to sell? Now, the agent isn't going to really tell you the real reason, because if they're saying, oh, we need to sell quickly because the client's in financial stress or a difficult situation, that's really going to give you as the buyer in a bit of an advantage situation. So you can definitely ask those questions. Obviously, err with the side of caution. Whatever they really tell you, try and sort of take it with a grain of salt, because it's not always going to be 100% accurate. But those two questions there, is the property sold and what sort of price guide, are probably going to be the main questions that you understand. Anything else, you want to do your own due diligence, because once again, the agent is representing the seller. So any information you do, you want to check.
Yeah, and I find even with the agents, it just depends on the agent. Sometimes if they're a brand new agent, they can be a bit more coy, a bit more salesy and less helpful. Sometimes they might be green, they don't know any better, and they can be helpful. You can't be too generalist with agents. You just need to go out there, have a chat to them, try and be honest with them and hope they're going to be honest with you. And even ask, have there been other offers on the property? Have they knocked them back? Because they might, again, give you a bit of information, give you a bit of insight. The more questions you can ask, the better you're going to be placed with your home.
Now, the next question we're getting a lot at the moment for especially our first homeowners is that I don't have a credit file. Can I still apply for a home loan? And how does it affect my chances of getting a home loan? Jaden, what does that look like?
Yeah, so in Australia, credit history isn't a big thing. So you might have seen other YouTube videos, especially from American-based businesses, and they say, oh, I've got to go out, go get a credit card, get a personal loan, build up a credit history, a credit file. In Australia, that's not true. You don't need that. You could have no credit history. You could be applying as a home loan as your very first item of credit in Australia. Your credit file can be created, and it doesn't go against you. Because in Australia, our credit system works where it's more a negative credit reporting. So it's not an issue if you don't have a credit history. It's only an issue if you have a negative credit history. So let me explain that. So if you've had an electricity bill you forgot to pay 10 years ago and there's a $500 default on your credit file, that can be problematic. That can be an issue, and that's where your credit history can come back to haunt you. But if you're Nathan, who's never applied for a credit card, never even had a phone bill in his own name, never had electricity, nothing, you're applying for a home loan for the first time, the banks are fine with that because they just say, well, it's just a green tick. Nathan can keep moving through. If you do have a negative credit history, Nathan, like what are some stuff you can do? What do the banks look for if you've had in that situation where you might have had a default in the past or an ex-roommate that forgot to pay an energy bill? What happens?
Yeah, look, the banks are really understanding as long as the default is little. So when I say little, we're talking about $200, $300, $400. Once you get going in the thousands of dollars, $1,000, $2,000, it does get further difficult. So if it's a telco, an Origin electricity bill, an Origin energy bill, they're things that, yeah, the bank's pretty understanding. They get that sometimes they get forgotten. It does need to be paid, and then, case by case, it is usually overlooked. If it's a credit card provider, a personal loan, and you've got a large default, that's where it gets really challenging. Once again, you can work with credit repair agencies that might be able to look into it and find out that the credit provider didn't give you the right information or they didn't send you the right details to pay that debt on time. But we would need to know more information. Once again, it's a more case by case. So if you do have this situation, it is something that can be looked into.
If you're not sure, get a copy of your credit report. You can look on Ilion, Equifax, just Google it. There's a couple of services that do that. We actually do this as part of our home loan process. So whenever we help our clients with pre-approvals, we get a read-only copy of their credit report, because there's nothing worse. With some banks, if you apply and you don't tell them, you don't warn them I've got that default, they just straight up decline you. They don't tell you why. They say, Nathan, bad luck. We're not giving you a loan. You don't meet our criteria. And don't even say, well, you had like a $200 unpaid default or something small that they'd otherwise consider. So keep that in mind. It's definitely worth checking out for today.
Definitely. Now, the next question that we get asked a lot are what are some tools we can use online to help in our home buying journey? Jaden, walk us through some helpful tools.
Yeah, so it depends on what part of the journey you're up to. But if you're at the very beginning, some tools that come straight to mind are, obviously the hardest thing is working out where you want to live, the areas you like. So checking out things like Walk Score is an awesome tool to have a look at areas if you're not familiar with them. Understanding what the cafe is, what the transportation, what it's like to get in and out of town is a really good one. Microburbs is another great tool. Similarly, it shows you a bit of demographic data, a bit on the sales volumes, really great. And the realestate.com.au sold section, Nathan, I know that's a good one just to understand what prices are selling for.
Yeah, look, the sold section under realestate.com.au gives you a great idea of what properties in the area are selling for. Obviously, you want to look at properties that are sold within the last month. So for example, if you're looking at a 3-bedroom house in say Ashgrove and you found another property in Ashgrove that sold 3 weeks ago, that gives you a great indication as to what the property might be worth. We've also got access to RP data. You can subscribe for their service whereby you can get RP data core logic reports generated that give you an idea of a comparative market analysis of other properties selling in the area, what that property that you're interested in might be worth. But definitely those tools are quite helpful. Jaden, our last question for today is, if you receive a gift, how does that increase your borrowing power, or does it not increase your borrowing power?
Yeah, so it can be common now for people to get potentially a gift from their parents, from family, to help with deposit is the most common way. And this can be structured in a couple of ways. So mum and dad might say, okay, Nathan, we're happy to give you $50,000 as a gift towards your first home. And most of the banks will want a letter signed by mum and dad saying, this gift is non-refundable. Nathan doesn't have to pay it back. We're giving that money and we have no interest in the property. And that's the way most banks like it. Now, where it gets a bit tricky is some parents might say, well, actually, Nathan and his partner are buying together. It's not a gift, it's actually a loan. And this is where it gets complicated, because if it's a loan, then the bank wants to know the details of repayment. They want to factor that in your borrowing capacity, and it can reduce your borrowing capacity like we covered earlier in the video. So keep that in mind. The third way you can do it is actually like an agreement that says on sale of the property. When Nathan and his partner sell the property, that's when it has to be repaid. There's no repayments in the meantime. He doesn't need to make any repayments monthly, but when he sells the property, we want our $50,000 back. And depending on the bank, they can allow that. Not all of them can, so keep that in mind. We've sort of seen it done a couple of different ways.
Yeah, look, and the key thing here is it doesn't increase your borrowing power, because remember, the bank looks at two things separate of each other. One is your borrowing assessment. That assessment is based on your income as to what the bank feels you can comfortably repay back over a 30-year term as the figure. So they'll look at your income, expenses, living expenses, liabilities, and say, Jaden, we'll lend you a maximum of $500,000. A gift does not increase that borrowing power, but what it does do is increase your purchasing power. Because if you can borrow $500,000 and your parents give you a gift of $200,000, the $500,000 borrowing plus the $200,000 gift means your purchasing power is $700,000. Obviously, that's a very simplified figure because you've got stamp duty, government costs that need to be factored into the equation, but that gives you an idea of what it all looks like. Jaden, that's the main questions we had for today. Guys, if you have questions that you'd like us to answer, leave a comment down below. Did you have any final thoughts or words you'd like to say before we conclude?
Yeah, I think now's, if you've got any questions, hit us up. We also have the Facebook community group that we can answer your questions to help you out with this. It can be tricky, the home buying process. It can be overwhelming. There's lots to do. As mortgage brokers, we help people through that process. So if you are thinking about starting the home buying journey, if you're not sure where to start, hit us up at huntergalloway.com.au. We'd love to help out.
Thanks, guys, for watching. We'll see you next time, and thanks again.